Excellent. All right. Hello, everybody. Hello. My name is Margie Remmers-Davis. I'm the CEO and founder of Acadian Accounting Education, and this is our weekly live stream that we hold every Friday at 11 a.m. inside our free Facebook group, the QBO Gym Locker Room. Today, we are doing something on the live stream that we have never done before. But I am so excited about it. Oh, I gotta move my mic because the camera catches it. I am super excited. We've never done this before. I am so excited, and I anticipate that it's gonna go really well and that we're gonna do more of these, okay? All right, but first, if you guys are here with us live, you already know you're here with us. But for the YouTube folks who are watching the recording, come join us. Come join us in the locker room. The locker room is your spot for hands-on practice using QuickBooks Online. That's all we do every day. Hands-on practice, hands-on practice, hands-on practice. You cannot learn how to ride a bicycle without actually getting on a bicycle. You can't learn how to do accounting and bookkeeping without actually doing it, okay? So that's what we're all about. As a member of the locker room, you get a free QBO QuickStart course. So if you are with us live, that means you're already in the locker room. This was emailed to you, okay? So when you joined the locker room, we asked for your email so that we could send you this free course, your QBO Quick Start course, if you did not get it. By the way, I forgot to ask, I've been asking lately, who here is new for the very first time on a locker room live? I always forget to ask. I tend to talk to everybody as if we're like old friends and everybody knows everything, and I forget that we've got new people. So I want to, Max, obviously, is first time, Anne-Marie, excellent, Nate, Renee, woohoo. All right, so I will try and remember that we've got new folks, and I will try Ishmael, excellent. So I'm gonna try and keep you in mind and not like forget that we've got all these newcomers. Okay, so as I was saying, so all of you new people, we emailed you your free course. So if you can't find it, obviously look in junk, spam, promotions, all that good stuff. If you cannot find it, please email us support@acadian.com. That's AKADIAN. And we want to make sure that you get that free course. The free course just teaches you how to sign up for your QuickBooks Online accountant account. It teaches you how an accountant account is different than a regular QBO subscription that business owners pay for. It teaches you the terminology, the workflows, how to get around, and of course, hands-on practice so you can actually learn how to use QuickBooks Online. Also, as a member of the locker room, you have access to over 100 free exercises. I swore that I was going to get this fixed this week, but I did not. The link is, there are so many exercises in there that it does take you, when you click the link, it takes a while to load. We're working on getting that fixed. I say that every week, and I keep saying I'm going to fix it so I don't have to say every week that you have to be patient when you click the link. People are always asking us, where are the free exercises? And here's where they are. So, well, first of all, they were emailed to you. So again, check your email. But also inside the group, in the featured section, you can either click featured here, or you can go to the featured tiles here, and this one right here says over 100 free hands-on exercises. Okay, so that's how you get the exercises. Also, as a member of the locker room, you get to participate in the oh yeah, so I'm sure, okay. anyway, you get to participate in this live stream. You get to interact with me, ask questions. You can only do that in the locker room. YouTube folks they just have to settle for the recording. So also on the free live stream, we work through a free exercise of the week. So in addition to the 100 that are already out there, you get, if you participate live, then you get a free exercise. And so we've got some people that have accumulated quite a bit of additional free exercises. Now, everything that I have mentioned so far, everything free Facebook group, free course, free exercises, free live stream, all that's free. But the exercise of the week does come from one of our paid courses, which is called the QBO Gym Locker Room. Oh, hello. It's not called the QBO Gym Locker Room. The locker room is the free Facebook group. It's called the QBO Gym. The QBO Gym is a subscription product for if it is hands-on practice actually being a bookkeeper. Okay, so everything that I've described, the free exercises are all just like one-off, individual, here, learn this feature. But if you have ever said to yourself that I wish that I could be an intern somewhere, or I wish that I could just like shadow somebody, or you're frustrated because you can't get the job without experience, you can't get an experience without a job. Well, that's precisely why we created the QBO Gym. It is an immersive experience of actually being a bookkeeper for a fictitious business owner. So you get a full year's worth of experience in about 42 real-time hours every month. It doesn't take, and it's a full year of experience, but it doesn't take a full year to get through. Like I said, it takes about 42 real-time hours. It's 3 to 4 hours per months of content. And you're actually being the bookkeeper for this fictitious business owner and handling all of these things that happen to the business owner during the course of the year. Okay, so the QBO Gym is tied to our proprietary dashboard. Why does that keep happening? Our proprietary dashboard called Booksmatch. And wasn't Marianne from last week? Is Marianne our top person today? Oh, I guess she is. Wait, let me refresh the screen. I feel like my assistant forgot to pick the top person. Yes, we have Holly today is our top ranked person. Congratulations, Holly. I've seen you several times. Oh yeah, she's here. She's here. Yay, woohoo, Holly. All right. So Booksmatch is our Booksmatch is our proprietary dashboard that keeps track of all of the skills that you are learning as you work through the QBO Gym. They are organized by skill group, which is, so we have these 10 skill groups, and you can click on any of them to drill down and see more of what you learned, what skills you were able to reinforce as you worked through the gym. You can compare yourself to others. You can see how you compare to everybody else that's in the gym. And then as you saw, we actually use these statistics to rank you. And you can become, if on your dashboard, there's a little link, there's a little slider that says open to work. So that if you want to be found by recruiters, business owners, accounting firm owners that are looking for talent, you just slide that little slider, and then they can look and find your profile to see what skills you have learned and reinforced. Now, you saw previously, I gave a big hoopla to Holly because she was ranked number 1 at this moment. And it changes all of the time, but we use 3 specific metrics to track whether to track your ranking or to set your ranking. Okay, the first metric is knowledge. Knowledge is the number of skills that you have accumulated, reinforced in your entire time, the entire time that you've been in the gym. Okay, so it's just like your breadth of knowledge. That is your knowledge points. And then we recognized that we didn't want to favor the people who had just been in a long time, because just you could be in a long time and have accumulated lots of skills, and then we have somebody else that's brand new and they may be a rock star, but it looks like because they're behind, because they're brand new, we didn't want to disfavor them. So we also have, in addition to knowledge, we have speed. And speed is not how quickly you can get through an exercise, but how many skills you accumulate within a given week. Okay, so we take knowledge and speed and we balance them out with this super secret algorithm equation. But the most important metric that we track is consistency. The reason that we track consistency is because we want to make sure that you are actually in and you are upskilling and getting better all of the time. We actually designed this dashboard with a recruiter, and she said that her biggest frustration was reaching out to people who weren't looking anymore, who'd already found a job or decided not to do it. And so she actually asked us, she said, I want you to just have like a weekly check-in, just like every week, just check a box, says, yes, I'm still looking, yes, I'm still looking. Well, we said, well, every week seems a little excessive, so we made it every 2 weeks. And we said, why have them check a box when we could actually make them do an exercise? So that's how the exercise of the week was born. The exercise of the week is why aren't these refreshed? The exercise of the week is actually a separate course in your dashboard, and it's unlocked. Again, this is if you're a subscribed member of the gym. It's unlocked when you have reached 250 points in the gym. You can find out how many points you have. If I go back to the gym, you can find out how many points you've accumulated. This is not the same as skills because anyway, complicated reasons. So everything in the gym is gamified. When I built it, my vision was that it was Duolingo for bookkeepers. And so everything that you do in the gym is gamified. There's bells and whistles and dings and woohoos and you earn badges and all this good stuff. And you earn these points, and you can click this little arrow down on the bottom to see how many points that you have accumulated. So in this account, there's 105 points. And once you have 250 points, then it unlocks this separate area for the exercise of the week. Okay, so that is what we are going to be doing today. But today, I'm going to stop sharing my screen because we have a very special guest today. I cannot possibly be more excited about our guest and what he's going to share with us, because I have had this dream. I've had this dream for a long time of bringing you guys niche training. And I think that I mentioned it like way back in November, kind of the vision and goal of what we were going to become at Acadian. And we are working hard with our fast track students to get the foundational knowledge so that you really understand bookkeeping and accounting. But beyond that, there are so many nuances that you need to know for specific industries. And if you were on our marketing call with Mike a couple of weeks ago, and we talked about how that's one of the best ways to build your business is if you can specialize. The more you specialize, then the more likely you are to be successful in that particular thing. And we talked about how niching down is just magic, All right. So we recently came across Max Emory, who runs Time Capital University, and he is a real estate investor bookkeeper. And not only that, he's a real estate investor himself, so he understands the nuances, he understands the game, and he also understands the importance of bookkeeping in doing it just right. And so I'm super excited to bring him on, and he's going to talk to us about real estate investing bookkeeping. We're going to start by talking like what are some things that are a little bit different. Now, if I can figure out how to bring him on, you can turn your camera back on, Mike. I know I had you, or Max, I had you turn it off. Yes. Okay, make co-host. And Max, turn on your camera. Let's see. There he is.
Nice. All right. It's working.
All right. Awesome. Well, we are delighted to have you here. Yay!
Thank you. I'm
Let's
excited. I'm
see.
excited.
Oh, we have somebody that just got an REI client on Monday.
Ooh, congrats.
Fabulous.
Congratulations. That's amazing. Awesome. Awesome.
Housing
Well, this is
specialist
just in
and a
time.
vet. Yeah. Housing specialist and a veteran. Be still my heart. I think she's talking about you.
Oh, I fit both of those things. Thank you.
Awesome.
Awesome. Margie, you have amazing energy. Just
Oh,
listening to you has like energized me. So thank you. Thank you. I appreciate that. So do you mind if I share my screen?
yeah, go ahead. I made you
Okay.
co-host, so I don't think you need permission.
Excellent. Excellent. So I think this is where we're playing the screen game. Can you guys
There
see
you
what looks like a
go.
slide?
Yep,
Okay,
I see
so
it.
we're
I don't know if
good to
anyone else
go.
sees it.
Okay,
There we
so
go.
cool. I think we're good then. So nuances of bookkeeping for real estate investors. I'll keep this super short so we can get into the real stuff, the exercise. So at a kind of super basic introductory level, so obviously you see on the screen number one, lots of different business activities and asset classes. So that's something that I've noticed as an operator in the industry, but also as the owner of a bookkeeping firm that almost exclusively serves real estate investors. Tons of different activities. You can have one business and there's like five different business activities. They'll have rentals, wholesales, flips. Maybe they do a little bit of private lending. Maybe they're also an agent, or own a brokerage or do some property management. Like they're kind of like a serial entrepreneur type group of people. And so you'll have a lot of things, potentially flowing through one company. Once they grow, they'll split everything out the way they should. But especially real estate investors who are just starting, they're kind of trying to figure out what works, and so they're doing all these different things to try to figure out kind of what their niche within their industry is going to be. So to me, that's something that's yeah. Go ahead, Margie.
I was just going to say that was something that was a big aha when I started listening to you, because I didn't realize that rentals, being a rental property owner versus a flipper versus a wholesaler, I did not realize that they're entirely different things, but they still fall under the REI banner.
Yep. Yeah, yeah, we kind of, there is a debate about this within the real estate investing industry. So this is like, true insider baseball, but yes, some people say real estate investing is just the rental properties, right? We're building long-term wealth with the rental properties. We're actually investing, like rental properties are an investment. Flips, wholesales, some of the other stuff you'll see is more transactional. So like that's more of the business side of real estate investing. And so, some landlords say that flippers and wholesalers are not real estate investors. They're just like, it's just another business, right?
I
But
can see that.
that's
Yeah,
that's
yeah.
super like insider type stuff. So but yeah, lots of different activities, asset classes as well, like storage facilities, like self-storage,
Right.
that is within the bubble of real estate investing.
Yeah,
Apartments versus single family, like, short-term rentals versus long-term rentals versus
yeah.
mid-term rentals. There's all these kind of different niches within real estate investing that people, kind of they tend to niche down after a few years once they've figured
Mm-hmm.
out kind of what they're interested in and what works,
Yeah.
similar to what we do as bookkeepers. So it's really no different there. But yeah, just be aware of that. And then number two, lots of entities and properties to track, as you could probably guess, right? And
Yeah.
so especially with rental properties, asset protection is huge. Like even from the get-go, just like normal business, protect everything from your personal, right? We want like a very clear
Mm-hmm.
separation there. But with real estate, you know, it's a popular structure to have some sort of holding company. You know, you got the person, you got the holding company. It's just a disregarded, pass through entity. And then you'll have 30 subsidiary LLCs, right? That hold a
Mm.
property, hold multiple properties. It kind of depends on what their risk tolerance is, what their strategy is with that, but lots of different entities to manage and keep up with, lots of partnerships, so you'll have filing entities versus disregarded entities. So that side of it can get complex somewhat quickly, but once you know this stuff, like you can do this, and
Yeah.
you have a competitive edge over everyone else who doesn't know that stuff. So,
Yeah,
um,
just being able to speak the lingo. Well, you're going to talk about lingo here in a minute, but
yeah,
just being able
yeah.
to have a conversation with somebody and use like those words and have them like realize that you understand the nuances, like that's huge. That's a huge advantage.
Absolutely. Yeah, I mean if there are some people out there, and I'm sure they're great people, but they kind of start to market themselves as a real estate bookkeeper or REI bookkeeper or whatever. But yeah, exactly as you said, Margie, like if you don't speak the language of the industry, then people
Mm-hmm.
kind of they start talking to you, and then they very quickly realize that, like, okay,
Yep.
you're not an actual, whatever that you're advertising. So yeah,
Yep.
that the lingo is definitely huge. Yeah, we have like a little lingo cheat sheet. So yeah, entities and properties. So this goes directly into QuickBooks. So it's not just as simple as, we have said entity with said REI. And when I say REI, I mean real estate investor. And we're just going to set up a QuickBooks. It's not quite that simple. We have to start with their entity structure. We have to get very
Mm-hmm.
clear, what are the filing entities, how do things flow, partnerships, disregarded entities. We have to get clear on that. And then we can say, okay, we need 4 different QuickBooks accounts for you. So
Yeah.
some clarity on that, because I probably, this is one of the number one questions I get within our community is how many QuickBooks accounts do I have? There's some different takes on that. So our firm has been doing this for a little while, and so I'll just tell you what works for us, and then you take that as you will. So each you know each entity a part of the same entity structure and disregarded. So the entity is disregarded for tax purposes, just passes through to the 1040. All of those can go in the same QuickBooks account, and we separate those using the location feature. We just convert it to a business feature. Filing entities, so partnerships, as corporations, those require their own QuickBooks account. Okay, and so when you go to deliver the financials to the tax professional, they will thank you if you go by that structure. If you don't go by that structure, they're going to be very mad at you, and your client's going to be mad at you as well. Okay, so ask me how I know.
Right, right,
Um,
right. So
and
I just need to interrupt you for a second.
yeah,
And we have, I don't know how many of you are on the call today that are currently in our fast track course. If you are in our fast track course, everything that he's saying right now about entities and setting things up special and paying attention to the taxes and being nice to the accountant, the tax preparer that's going to receive the books, like you, that is something you all should be very, very familiar with because we take a deep dive, deep dive into that. If you are not in the fast track and this is going over your head, what he's saying, then grab the fast track so that you can understand what he's saying, like what the different entities are, how it affects the taxes, and how things need to be set up. Because that's like a foundational thing. You don't want to like hop into what all of this stuff, this extra stuff that Max is talking about, if you don't have that foundation first. All right, back to you.
I love it. I love it. Yeah, we usually when people join our community and they don't have some sort of general bookkeeping course certification, whatever it is, like we point them towards Acadian, we point them, towards
Yeah.
just companies like Acadian. So yeah, I love that. So last part of number two is just properties. So we have the QuickBooks now. We have multiple entities potentially within the same QuickBooks. Got that build out. And so how do we track the properties? And so you can use the class feature. Class feature is great. You can also use the customer feature. The customer feature is actually what our firm, Time Capital Bookkeeping, uses. And so back in the 2021, the very beginning of me kind of starting to do all this stuff, I did both. Two different clients, customer feature, class feature. I ended up going with the customer feature, and that's just a preference. So you find out what your preference is. Something significant to know about the class feature is, with the subscription levels within QuickBooks, you have the plus, and then you have advanced, and so plus limits to 40 classes, I believe, if that's still a thing with QuickBooks, and
Mm-hmm.
so if you need more than 40, you have to go to advanced. And we all know how big of a jump that is as far as the cost of a
Right.
QuickBooks Advanced. So yeah, that's a significant point about classes. But customer feature, it works basically the same way. You can pull anything and everything you would ever need to pull, the whole business down to each individual unit that's being managed within that business. So
Awesome.
good way to do it. Chart of
And as
account.
a
Yeah.
reminder, guys, customer allows you to have like a full on different, I'm sorry, allows you to have like a full on different addresses and phone numbers and contact information and all of that stuff. Whereas if you're using projects, it's all tied to the same one. So that's why you would use customer versus project. I don't know
I
if
like
that
it.
was a question that anybody was going to ask, but
I'm sure.
it's
Yeah, I'm
more
sure.
robust. It's more, I mean, it's more robust for what you guys are doing. Yeah.
Yeah, yeah, and we actually get a lot of we get a lot of questions about the project feature as well because
Hmm.
so specifically within house flippers, if you guys have seen HGTV, almost 100% of those shows are house flippers. They don't call
Yep.
themselves that, but that's what they are,
Yeah.
just for reference. And so, with our flippers, a lot of the times they want to use the project feature because the terminology makes sense. But as far as how we code things for flipping properties, and I'm kind of getting ahead of myself, but not really because we're in the chart of accounts section now. And so everything for flips goes to the balance sheet. So like maybe you think like, okay, I have an expense for an active flip. It should go to cost of goods sold. It's actually not true. It goes to the balance sheet, inventory, asset accounts, and transactions that are coded to the balance sheet do not show up in that project dashboard. And so
Oh, right.
that's one of those disconnects
Yeah.
with the project feature. And so yeah, just something we typically say we actually don't we tell our clients or prospects or whatever we don't need the project feature because anything and everything you need to see for each individual flip project we
Mm-hmm.
can create a custom report and we can just give you the link to that custom report and click that link and boom you have all the data that you need. So
Awesome.
um, yeah, so that's that. So two-dimensional chart of accounts. Some of you who are familiar with the real estate, bookkeeping world, you've probably heard of this. A few different courses kind of go into this, but basically, we don't want to see any property addresses within our chart of accounts. That's kind of one of those like beginner mistakes.
Oh.
123 Main Street, 546, Main Street. Because what that's going to do as the portfolio or the business grows, it's going to stretch out the financial reports way too long. So
Mm.
it's basically going to make, balance sheet, P&L, just everything way too long, like almost unreadable. Because,
Yeah.
we want us as investors and, as client, we want our clients to be able to make data-driven decisions off of the financials that we provide them, right? Like
Yeah.
that's a major value that we provide. And so we want to keep those readable at all times. And so the main chart of accounts, it's just going to have, instead of 123 Main Street mortgage, it's just going to have mortgage, right? Conventional mortgage or hard money, whatever it is. And
Mm-hmm.
so that will give, if you just pull a normal balance sheet, P&L, and QuickBooks for a large real estate portfolio, what you're looking at is the entire portfolio put together and also non-property specific transactions. Um, And then we can drill down, right? Because we have the customer feature, we have the class feature, we have the
Mm-hmm.
location feature. We can drill down into whatever we need to drill down into, but we want to keep the main chart of accounts as concise as possible. So that's just a note on that. Anything on that, Margie?
No, I think that's brilliant. I hope everybody wrote that down because what did he say was a beginner mistake? A beginner mistake. He said you should never ever have the property address on the balance sheet. So for those of you who have REI clients already, and I saw you guys posting in the chat, some of you do. That's something to check out. Check out. So that's brilliant. Yeah.
Yeah. And, just to clarify, like if a real estate investor, they have their 3 rental properties or whatever, and they say, I 100% am, I'm never going to purchase another property, which is not really a thing with real estate investors. But if that was the case, it's fine. You can have what we call a one-dimensional chart of accounts, totally fine. But most business owners in general, right, are looking to grow over time. And so we
Yeah.
just want to make sure we have the structure set up so that we can facilitate that. So,
Awesome.
um, REI lingo, we already touched on that a little bit. I mean, that's just huge. Like, if you guys haven't heard of, there's a company called Bigger Pockets, biggerpockets.com,
Hmm.
started back in '07 or something, way back. It's just gotten really big lately, probably within the last 10 years. So that company, they are a real estate investing education company. And so
Oh.
similar to Acadian, honestly, but they just educate people on how to invest in real estate. And
Uh-huh.
so you can go there. They have a forum. They have a publishing company, so they have different high-level investors write books, and they flow those books through Bigger Pockets, so you can access those there. But yeah, just check out Bigger Pockets and start getting
Yeah.
some education of how
Yeah.
real estate investors talk. So
Yes.
um,
Yes. This
lingo is
is one
huge.
of the things, guys, that we were talking about with Mike a couple of weeks ago. If you guys were on that call, about when you're picking a niche, that you want to learn everything about that niche. Like become obsessed with that niche, whatever it is, whether it's beauty or food trucks or real estate investment. Like become known in that niche, understand the lingo, understand the challenges, being able to speak and understand what they are doing is like that's huge. It's not just about the bookkeeping, it's about the whole like industry and what's happening. Like when Max started the call and he said something like, well, here's a little insider secret about what's happening in the industry. That's the kind of stuff you guys need to know about whatever you have picked. All right, go on.
I love it. I
Off my
love it.
soapbox.
I love it. Yeah. So the last one, we have a student community. Students ask questions, and it's like an exclusive thing. Um, and so a lot of the questions we get in that community are, okay, client has a rental property, they bought this for the property, capitalize or deduct, right? So like in
Mm-hmm.
real estate is incredibly balance sheet heavy. So like that's a
Yep.
nuance for that industry.
Yep.
The thing is though, it's not that simple. Like I actually built a to capitalize or not cheat sheet just like
Oh.
for rental properties. And it's kind of flow chart style, yes, no, kind of binary.
Yeah.
And I built that for our internal team, and now we give that out through our courses and stuff. But yeah, it's very helpful. And that one cheat sheet, I think it's
Uh-huh.
a few pages long. I had to devour like 3 different IRS publications to get
Yeah.
that. So like it's not super
Yeah.
straightforward. There is some flexibility within the tax code for tax strategy. So
Mm-hmm.
real real estate tax strategy is massive. So like
Yeah.
if you have real estate clients, a lot of them are
Yeah.
just investing in real estate for the tax benefits,
Yep.
depreciation, all sorts of stuff. There's all sorts of like loopholes within the tax code for specifically for real estate. And so if someone buys a, uh, you know, HVAC unit, we're definitely capitalizing that, but maybe something that's not super clear. Like
Mm-hmm.
we just bought all this furniture to furnish this short-term rental.
Mm-hmm.
That's going to be one of those things that is subjective. Do
Yep.
we want to lower our taxable income this year, or do we want to maximize our taxable income this year?
Yeah.
So there's flexibility within the tax code, which makes this a little more complicated. You guys are like
Yeah.
catching the drift with the complication of this niche.
Yeah.
But once you figure this out, once you make great relationships with your clients' tax professionals, which is huge for real estate, um, you have a massive competitive advantage over other people who are trying to do this. So
Awesome, awesome. And I I don't want to sound like a broken record, but if you guys need if you do not understand the difference between capitalizing and he's using the term deducting, but I would use the term expensing. Like, if you do not understand the difference between those two things and why that is important and why you can't just, buy a house and write it off on your taxes, then that's why you need that foundation that's in Fast Track. I know people have been putting in the link there, but like, it's just so huge to lay that foundation so that what Max is talking about on top of that makes sense. All right.
Love it.
Anything more on this, or should we dive into our exercise?
I'm sorry. You're asking me.
I'm asking you. Yeah.
Yeah. I'm good on this as long as everybody else is good on it.
All right. Well,
Thank
we've
you
got
so
a
much.
couple of questions. We've got a couple of questions in the chat. So let's go ahead and address those.
Okay.
Let's see.
So I see one, elder housing. What would elder housing be? What do you mean by that? Deb? Elder housing, just like literally like an old property. Oh, nursing home. Got it. Yes. Yes. Yeah. That's a niche within real estate investing that
Yeah.
I did not mention. Yeah, that's huge. I'm actually in a real estate investing veteran mastermind, and there's a lot of people in there that are into that. So nursing homes, and there's like assisted living. The assisted living space is massive.
Yeah. Yeah. And getting more. I mean, all the boomers are going into there. Like, yeah, it's huge. But you know what? It's gonna burst, though, don't you think? Like, it's gonna. Well, I don't know. We get. We don't want to get into that.
Yeah, that could be a long one.
Yeah. Uyi is asking, I guess she's in your course already. So
Okay.
she is asking, the chart of accounts you show in your course shows flip 1, 2, 3, etc. If those flips are sold, do you deactivate those accounts or use the same chart of accounts for new flips?
It's a good question. Yeah, that's the whole thing with that two-dimensional chart of accounts. We are using the same chart of accounts for, no matter what happens, basically. So, for our flippers, we have the balance sheet accounts, the inventory asset accounts, and then on the income statement side, the P&L side, we have the same accounts, but as cost of goods sold accounts. And so after the sell, we're doing an adjusting journal entry to transfer all the balances from the balance sheet over to the P&L. And then post sell, everything to do with that flip should be on the P&L. So you have your income, you have your cost of goods sold, and then you have, whatever the net income from that specific project is.
Okay. All right. So I think that's all the questions as far as like the nuances. So we're gonna hop on and do an exercise. So Max, if you want to stay, I'm gonna walk us through the exercise. But if you want to stay on, then if we have any questions or if I did anything wrong, then you can answer them. All right. So this exercise. So those of you who are currently subscribed to the gym and who have the 250 points, you want to make sure and use the link that is inside your account. Okay. So Joel has put the link to the exercise inside the chat, but that's only for the people that don't have the gym or who don't have the exercise unlocked. Okay. All right, so we're gonna go and we're gonna click here to this darn Zoom. Okay, so here is our scenario today. So your real estate investment client has an automatic payment. I can't see Max anymore. I don't know. Hopefully you're still here, Max.
Oh yeah. I'm still here.
I don't know why I can't see you anymore. Okay, you're still here. I'll trust that you're still here. So your real estate investment client has an automatic payment to one of their loans that shows up in the bank feed. You'll need to split the payment into principal, interest, and, since it's a conventional mortgage loan, escrow. Now, this is something that Max pointed out to me is that's unique to the real estate. We've talked a lot about how you have to split principal and interest, but when you're talking about a mortgage loan, then there is escrow, which is a third thing that you have to make sure that you split that with, okay? So this course, those of you who are asking in the chat are like, when do I get the link for Max's stuff? Here is where you get the link for Max's stuff. We'll also put it in the chat. So yes, escrow, thank you, Siraj. Yeah. Is the escrow is when money is held to be paid to pay the taxes and insurance. Most of you, if you guys own a house, you're probably putting money into escrow at the same time. All right. So here you can, if you can get the full course, he goes all into detail in his course called Nuts and Bolts. You can click that link there, but he also has a mini version of the course. And I have to tell you guys that I started going through the free mini course, and it is so packed full of stuff. Like, just the mini course is so packed full of information. He says it's only about 5 to 10% of the full course. So there's the link. You can get also at that same link, you can find out, and we'll talk more about this at the end, you can find out all about his other stuff. But here's where we're gonna load the sample company. And now these directions are how to get to the sample company from inside your QBOA. That's your QBO accountant account. Which, if you don't know how to have a QBO accountant account, that's what the QBO QuickStart course is that I mentioned in the beginning, okay? But we also have a little quick link where you can get straight to the sample company, and that is acadian.com/QBOA. And I think that Joel put that in the chat. If not, he will soon, okay? So we're gonna go to the sample company. Did I tell you guys, like the other day, I was trying to get into the sample company and I had to go through that darn CAPTCHA thing like 5 times. Like, I was beginning to think I actually was a robot because I could not pass the dang CAPTCHA thing. All right, so here we are. Here we are inside our sample company, so we're all ready to go. All right, so now we're gonna have to do some setup in the sample company. Max talked about the chart of accounts, setting up the customer that is the rental property, and then we're also gonna actually set up the locations feature. So we're gonna do all of these things. But before we do that, I just want to point out this little button here that says Guide Me. So all of our exercises are done using a product called Scribe. And Scribe comes with an extension, a Google Chrome extension. So you can go to the Google Chrome store and you can load this extension that says Scribe and has this little icon here. And once you have it, if you have the sample company loaded and you have that plugin, then when you are first starting the exercise, you see this button that says Guide Me. I'm going to click it and then confirm, and whoa, magic happens, and we have the sample company on one side and we have the exercise on the other on the same page. Okay, so now let's go ahead and get started, as I said, in the sample company. The first thing we're going to do is we're going to set up locations. So we're going to set up the location feature so that you can see how it's done or how Max uses it, but we're not going to actually set up locations. But if you'll remember what he was saying earlier, is that this is how he identifies different entities, okay? So the way that, so we're going to go to the gear icon. We're going to click Account and Settings. We're going to go to Advanced. And here it is, Categories. If you're brand new, then today's lesson, I'm sure, is it might feel a little intimidating because this is some high level stuff, okay? What I always say, if you're brand new and you're just starting out, don't worry because you might not soak up everything, but you're gonna still get wet, okay? So in the course of the month, as we go through, we have these live streams. We start on the first Friday of the month is like a very basic introductory lesson. And then as it goes through the month, it gets harder and harder, okay? So niche is a little bit, I mean, what we're talking about today is pretty advanced. And we'll be advanced. Next week will be level 2, and the following week we're going to have actually a cleanup lesson. Okay, so don't worry if you're brand new. Don't worry if this feels overwhelming. You're still going to get wet. Okay. All right. But to point out for those of you who are brand new, if you don't know how this works, when you are inside Account and Settings, notice how my cursor, as I move it to the different sections, they're highlighted. So what you have to do is you have to click it in order to unlock it and make it editable. You can do that by clicking the pencil, but you don't really have to click that. You can just click anywhere. So I'm just going to click anywhere on that line. We're going to turn on locations. Okay, so that's what we did here. Okay, and now we are at whatever step that is, step 7. And now I'm going to change the location label, and I'm going to change it to business. Okay, so this is going to, every time that you would, those of you who've already gone through level 2, who already know about how to use locations, and maybe you've heard us talk about how, oh yes, you can change the label, but you've never seen it in action. Here's how you do it. Okay, so now we're going to change that to, we're going to save it and then click done. Okay, as I mentioned, in a real life scenario, the next step would be to actually set up those locations. We're not going to do that because we just need to see the field for this exercise. We don't actually need to see the locations. But like Max was saying, this would be your entity, okay? All right, so now we're gonna track each property as a separate customer. This is what he was saying. He said that you could do this either as classes, but classes are limited. But he found that customers work really, really well. So that's what we're going to do. And we're just going to set up one property for the purposes of this exercise. So click plus new. And then very at the bottom, if you did not know that, some of you guys are old timers and you didn't know that QuickBooks added this at the bottom of the list. There's now an add customer here, an add vendor here, an add contractor here, and an add product or service here. This is all new. All right, so we're going to click add customer. I guess so many people were like wanting to find it there, and then they couldn't find it and enough people complained. Okay, so we're going to say that this is a rental. Now, I mentioned earlier that it wasn't until I started diving into Max's stuff that I realized that rentals and flips are really entirely different things, okay? So this exercise is totally focused on rentals. If you have a flip, then it's going to be handled differently. We'll point out a little bit of how that is. Okay, 2535 Garcia Avenue. If you ever see these fake addresses that I put in some of these exercises, they're all Intuit headquarters. Okay. All right. So now we've got our customer. Now we're going to set up some accounts in the chart of accounts. So we're going to go to the gear icon and select chart of accounts. Now, just FYI, Max has a full-on chart of accounts that you can buy that is specific to real estate investor clients. Like, people are always asking, oh, how can I get a chart of accounts for this, that, and the other industry? Okay, well, Max has put it all together. He's got all this experience. Remember, he's not just a bookkeeper, he's an investor himself. And so he has figured it out. So on that same link, you can go and you can get just the chart of accounts. Hey, Max, is the chart of accounts included in the full course, or is it still a separate purchase?
Yes, it's
included.
It's included. Well, so it's not. So the nuts and bolts course, you get 90% off of the chart of accounts, and so as you're checking out for nuts and bolts, it'll be down. Just scroll down a little bit, and you can check it 90% off. Yep.
Yeah. Okay. Awesome. So we obviously don't have that full chart of accounts. He's got, again, those of you who are in Fast Track, I hate to be like, I sound like a broken record seriously today about Fast Track, but that's just because I don't usually hammer it this much, but it's just because it lays the groundwork for understanding what he's talking about. So, in Fast Track, we hammer the chart of accounts, and you get to practice changing up the chart of accounts, understanding how it connects to the tax forms. Those of you who are in the course, like, you guys can talk in the chat about how awesome it is. Like, I mean, but that's like really that's why we call it Fast Track Foundation, because like that's really the core, like, to really understand that. All right. So we're going to start with the loan account. We're going to click the gear on. I'm going to close this just so we have some more real estate here. Okay, so I'm going to go to the gear icon, select, I was ahead of myself. Okay. All right, so now we're going to click new. All right, I'm just keeping an eye on the, how come Intuit headquarters have Hector Garcia's last name? I think that is just I think that's purely coincidence. All right, so we're going to create an account for the loan. We're going to call this conventional loan, and this is the account that's going to track the principal of that loan. Now, this is another thing that I learned that didn't even occur to me until I started diving into Max's stuff. And I don't know if you want to say just a tiny bit about this, because it wasn't in your nuances spreadsheet, about different types of financing. The fact that there is just so many different types of combinations. Do you want to say something about that real quick?
Definitely. Yeah. It's crazy. You really don't find out that there is so much financing out there, especially for real estate, until you start kind of messing with some of this stuff. But yeah, if you have a primary residence, you have a mortgage on your house, like that is what we would consider a conventional loan, conventional mortgage, just like Margie has here on the screen. So that's kind of what we're talking about here. Principal, interest, escrow, typically, not all the time, but typically. And then we have hard money. Hard money is tied to a fixed asset. Real estate is a fixed asset, and it's typically shorter term loans, higher interest rates. And then we have private money. So private loans, some real estate investors raise money from family and friends, non-accredited investors versus accredited investors. Like, that is a whole world in and of itself.
Yeah.
Raising money via funds, that is a whole thing within real estate as well, that you'll just pick up that stuff over time. But private money is great. I go to my friend Mark. he wants to invest some money in this deal with me. Okay, cool. Like that's private money. I pay him interest. I give him back his principal at the end. So hard money, private money, typically interest only payments month to month, super easy to track on the bookkeeping. And there's, home equity lines of credit, home equity loans, just business lines of credit, all that stuff that you guys have probably heard of before. But yeah, so many different,
Yeah.
financing options. Yeah.
Yeah. So I actually just this past year invested in my first real estate deal.
Oh, I love it.
And just the way that it works, like you guys don't even understand. Like they form, this is what we mean by entity. Like the individuals don't buy the property, the entity buys the property, and you are a percent owner of that entity. So anyway, yes, it gets complicated. Okay. All right. So let's see, what do? Okay, so we put in this is the account that's tracking the loan. So I'm going to hit save and new. Now, normally, you guys should know this, is that when you create a loan account, you have to create a separate transaction that tracks like where the money is going, whether the money is going directly to an asset or whether the money is going directly into your account. So you have to have a separate transaction for that. I'm not doing that in this exercise, and you'll see the results of not doing that later on. But just if you're watching me and you're like, but wait, Margie, okay, just settle down. We know we're specifically not doing it, okay? All right. So now we're going to track the interest on the loan. Now, because this is what I wrote here, because it is valuable for investors to track the interest on each type of loan separately, we'll create a conventional loan interest. We'll create the conventional loan interest as a sub-account. Is there anything that you wanted to say about that, Max?
I don't think so. I don't think so.
Okay. All right. I just picked that up from your instructions. You didn't go over it specifically, so I was like, okay, well, I guess this is the thing.
Yeah,
But then go ahead.
Sorry, Margie. Yeah, it's not super necessary. It's just kind of how you want things to land on the financials.
Yeah.
And so, some
Yeah.
investors like to see parent interest and then conventional hard, private, that sort of
Yeah.
thing. So,
Yeah. So that's what we're doing here. And then so we're going to create the parent account and then the sub account. But the thing that you pointed out is that these expenses are different if it's a flip versus if it is, so this is a rental property, which means it's going to be an expense account. But if it's a flip, it's going to be, the interest is going to be in COGS. Is that correct?
it's actually going to go to the balance sheet, which really throws people off. So we, within the inventory, the flipping inventory asset accounts, chart of accounts on the balance sheet side. Yeah, so we have like a flip interest account, and it's an inventory asset account. Yeah, so it actually goes there.
Wow. Okay, so guys, you got to get his course so you can get all these nitty gritty details. Okay, so I don't know, Lindsay, maybe you could edit this little thing a little bit because I said as a type of cost of goods sold. So maybe we could massage that wording a little bit so that it's closer to what he just said. Oh, I've got this one. Okay. All right. Save and new. Now so that was that step. Now I'm going to do conventional loan interest. And this is going to be, I think that I may have just set up the other one. See, this is what happens to me all the time, guys, is that I chat with you and then I do things wrong on the screen because I was paying attention to you and I wasn't paying attention to the screen. I think I set up that last one wrong. We'll see. We'll see here in just a moment. Yeah, I did. Okay, guys, hopefully you are following the exercise and not what I'm doing on the screen, because Yeah, I set up interest paid as a long-term liability. No.
I'm I'm the exact
What?
same way. I can't.
Who?
I,
Why didn't anybody catch me? Why didn't anybody catch me in the chat? Say, Margie, what are you doing? All right. Interest paid. All right, there we go. Now I can do save and new from here. And conventional. Ah, conventional. The other thing is when you're live on camera, you forget how to type.
math too.
Conventional. Do you do any live things, Max, or do you just have the on-demand course?
So course wise, I don't do anything live, but we actually have our first webinar within my community today. Actually, I think it's like an hour after this call gets out. So yeah, I'm starting kind of a bi-weekly webinar type of deal, Friday afternoons. So
Is
I'll,
it just going to be a Q&A? Are you teaching something or?
so this one is how to get your first client, and it
Oh,
is, yeah, 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 yeah. So people who are ready for that, and
yeah.
kind of know how to do the bookkeeping and stuff. So yeah, it's super short, 5 to 10 minute talk, and then we'll do like 20 or so minutes of Q&A, just
Now, is
about.
this for your Facebook group or for
Hmm.
your paid students?
Yeah. Facebook group, free Facebook group.
Okay. All
Yeah.
right, guys. Everybody needs to join his Facebook group and then come to his thing this afternoon. Oh my gosh, because then you'll know. All right, so let's talk about the escrow account is going to be an other current asset account. Again, you guys in Fast Track, you understand the difference between an other current asset and a fixed asset, right? So this is just a temporary account, and it's eventually so the money's gonna go in, but then eventually it's gonna be paid out to the different organizations, whoever's getting the insurance, whoever's getting the taxes. All right, is this the account, the one that you use, the mortgage real estate loans? That's what I put in the exercise.
Um, Honestly, as long as it's a other current assets account,
It
yeah,
doesn't really
I
matter.
think it's flexible. Yeah.
Yep. All right, so that is it for our accounts. So now that we have our accounts, we're going to go and we're going to process bank feeds. Now, one of the things that I found really interesting in your stuff, Max, was that that bookkeeping for real estate investors is a very manual process, and
Mm,
that there isn't a lot of like bank rules. Like there's just a lot of stuff that you have to do manually because
hmm.
there's so much complexity.
Yes, yeah, that's 100% true. Yeah, for their general business expenses that are maybe that they hold at the holding company level, you can set up rules and automate that stuff. But yeah, the property specific transactions, some of those you can, but most of them you can't. So,
Yeah.
yep.
So you guys should know that when you are recording a loan payment, if you well, any type of expense, you can either wait for it to show up in the bank feed, or you can create the expense and then just match it in the bank feed. Okay, so you could do it either way, but what we're talking about today is creating the expense from the bank feed record. So this is something that has already been paid. Okay, so again, I'm going to close this guy. So here we are. All right, we've closed the pop-up. Now, you guys should know this from other exercises that we have. Those of you who are in the gym, have certainly done this. Fast Track, we haven't covered this yet, but you will get a loan statement. And I kind of doctored up one of Max's loan statements here. And if you'll notice that this is a statement, this is saying, okay, this is how much you have to pay, okay? But in this exercise, we have already paid it. So what we're using is the past payments breakdown and not the current, not the numbers of that we're gonna pay currently. So this is, you guys should know this. This is unless you're brand new, you should know this is something that you have to do with loans, is break it out. But what we've talked about is how in this one we have those 3 accounts now. It's not just principal and interest, it's principal, interest, and escrow. Okay, so we see here. So we're going to use these numbers to complete do the bank fee transaction. And the one we're going to do is, so this one is $666. The only transaction that's in here that's $666 is this one for Tim Phillip Masonry. It's already matching to this bill payment, but we're not going to use this bill payment. And maybe it's that happens. Maybe it's matching the wrong one. So it's not an uncommon thing to to have it not accept the match. Okay, so what we're going to do instead is we're going to click categorize. All right, I don't want to get ahead of myself. I'm seeing the chat light up a little bit. Let's see.
I'll
Max,
hop in
I
there.
see I see that you are answering some of the questions. So if you want to do that, then I'll just keep going.
Got it.
All right, so we are going to split this. I'm going to click split. All right, so a couple of things that I want to point out. First of all, we talked about having the business. Remember, we set up the location and we changed the label so that it was business, and that reflects the entity. Okay, so this is where that shows up if we were going to select an entity. So that's how you see it here. The other thing I want to point out is the bank description says Tim Phillip Masonry. That's just from the sample company, and we can't change it. So in this particular exercise, we're going to ignore it. In real life, obviously, the bank description would reflect, what we're doing. Okay. All right. So the first thing we have to do is we're going to have to set up the new vendor. Let me scroll down to where we are. And we have to select add new. And this is Loan Depot. All right, so now using the numbers from the loan statement, we're going to complete the form as shown below. You can click on it, or you can scroll here and make it bigger, I think. Or you can go back to the exercise to find the numbers. I've done this so many times now, I think I have them memorized. So, and we're just going to split this to the, oops, what did I call it? Conventional loan. The one that's the principal. And I think it's $222. And then here is where you're going to enter that rental property that we set up. Okay? That's how it all comes together, guys. It all comes together. It's going to come together even more beautifully when you see the reports. Okay, so we've got the loan, then we have the interest, and I think that one was 246. No, I think this first one is 220, and that one is 246. Rental property again, and then we have to add the line to be able to add our escrow, and that was $200 rental. Okay, so now these all add up to $666. There's no difference, so we can go ahead and split and add. Alrighty. So now that we've done that, let's see how it affects the reports. Those of you guys in Fast Track, no, we're always checking the reports. We always want to know how what we're doing affects the reports, and we always want to check the reports to make sure that we did it correctly. Okay? So I'm gonna open up the left nav bar again, then we're gonna click reports and standard reports. We're going to take a look at the balance sheet first. Alrighty, so now you can see, here's the escrow account under other current assets, and here is the loan. Notice that the loan is a negative number. It's negative 220. Why is that? Somebody tell me in the chat. Why does the loan say negative 220? I said earlier, but I want to see if you guys are paying attention. I'll just wait. I will just wait. Siraj says the setup of accounts. Stephanie says because you're paying it down. Well, that's why the transaction is negative 220, because we're paying it down. But why would there be, you shouldn't ever see a negative number in the liabilities section. Let's see. Yes, Anna Marie. Good. Anna Marie, didn't you say this was your very first time? Good job. Because she says, oh, I keep forgetting I can put this on. Because we didn't set it up with the beginning balance. Exactly. So, we didn't set it up with the beginning balance. We did not use the opening balance inside when we set up the account, setting up the chart. In the chart of accounts, there's like that little box where you can say what's the opening balance. You never want to use that. Don't ever use that. Well, never is a strong word, but there's not a lot of reasons why you would use that. You always want to create the account and then create the transaction that reflects the loan. Okay, let me see. All right, good job. You did not initially set up the loan. Right, so this loan, this conventional loan, like it would normally be, I don't know, $500,000, and now it would be $500,000 minus 220, okay? All right, good job. All right, so now everything that we see here, this on our balance sheet, this is everything. But we want to see just the one property. We just want to see the numbers for that one property. How are we going to do that? How can we look at just that one property? Let's see. I'm quizzing you guys again today. All right, let's see. Oh, good. Siraj is talking about debits and credits. We didn't even do that today. We've got so much to cover today, guys. We didn't even have a chance to talk about the debits and credits. I'm still waiting to see if anybody knows how we can look at just the one property. Ah, Stacy, filter by customer. Either you are super smart or you read ahead in the exercise. All right, so we are going to filter. We're going to use the filter. Remember, the filter is always how you narrow down to look at a smaller section of the larger thing, okay? So we're going to select filter. We're going to filter by customer, and we're going to say that the customer is that rental property. And boom, now we just have the ones that reflect that. All right, now we can do the same thing with the profit and loss. And boom, let me skip, I always get ahead of myself. Okay, we're gonna do the same thing back to standard reports. This would be a good idea to save this as the property with the property name, so every time you pull it up, you have it. That's one of the things I do love about the new modern design of the reports, is that it does force you. It's like, you spent all this work customizing this report. Are you sure you don't want to save it? And it asks you. Okay. All right. So we're doing the profit and loss. Okay. So here's our profit and loss for the whole business. We just want to see the profit and loss for this particular property. We're going to do the same thing we just did. which is we're going to filter it by customer. Did it select it? What happened? There, rental. There we go. And there we go. That is our P&L just for this particular property. All right. Let's see. Done. Is that we did everything. We did everything. I always like do more than. Okay. All right. Let's see. Filter by customer. Excellent, Stacy. All right. So that is our exercise today. Again, if you want to get into Max's world, then if you want to learn more, you can tell already like how deep his knowledge goes on real estate investing. So if you click, there's a link at the bottom and a link at the top, and it will take you to his little store here. I mentioned that the mini course is in there. The mini course is, I cannot believe how much content there is in the mini. It's like it's not even a mini course. You got it, Max. You got to come up with another name for it because there's so much content in the mini course, and he gives away absolutely free. And then of course he has other courses. The nuts and bolts is the one that has all of the technical training. I mentioned earlier that you can buy the chart of accounts by itself. But why would you do that? Like, you get the full course and then get the chart of accounts one as just an add, whatever, add to cart thing at a huge discount. And then he also, this course right here, this nuts and bolts course, this is just the technical stuff, but he can also help you build a business as a real estate investor bookkeeper. And I'm going to bring him back on. I'm going to stop my share, and he's going to talk a little bit about why you would want to be a real estate investor bookkeeper. It is a little bit harder work, but
Absolutely.
There's magic in it being harder work. So tell us about that.
Sweet. Thank you so much. So, benefits of bookkeeping for real estate investors, and this is just, from my personal experience, right? So, that first slide, like, and then Margie's exercise, like, I don't want that to scare you guys off, like this stuff it's like anything else. It's very learnable. I like to say the opportunity is in the hard, right? So like
Yes, precisely.
this is a harder niche, right? Which scares people away, which means, maybe there's less competition for us who commit to this niche, or maybe we just have an advantage because we actually commit, we learn this stuff, and we do this stuff well. Because from what I've seen, there's a lot of people out there that advertise, they're an REI bookkeeper, they're a real estate bookkeeper, or whatever the case. And I say I see a lot of these people because we get the people who leave them, right? So we get prospects,
Right.
we get clients from that bad situation, and I'm sure they're lovely people, but they really screwed up somebody's books, and that person is not happy now. And I talk to those people every single week, and so there's a lot of opportunity with this stuff if you learn it and if you know how to do it, because there are so many more real estate investors out there than there are people like us to serve them. It's a crazy mismatch of supply and demand. It's absolutely nuts. So anyways, I'm getting ahead of myself. Let's just get into it. So learn about the industry if you're interested in investing yourself. So like that is a huge, I invested before started this business the tail end of 2021. I started investing in real estate like mid 2019, like August 2019. So a little bit before I started this business. But with a lot of bookkeepers, the opposite happens, right? They get into this, they chat with their clients, they see how the financials work with some of this stuff, and they get really interested, and they learn from their clients what works, what doesn't work, right? So that's huge. Just talking to your clients, you can learn a good bit about this stuff. And and also learn where your clients have learned, right? Like they didn't start knowing this stuff. They listened to podcasts, they went on websites,
Yep.
they YouTube, YouTube University, like all the stuff, right? So number two, and this is kind of really the same point, you can see the back end operations of real estate investors who are successful and then ones who are not so successful, right? And so, you get to see literally their closing documents for their deals.
Mm,
And if you're interested in this stuff, of course we translate all that stuff onto the books, and that's a process for the bookkeeping side of things. But you can take a look at their closing package and for the successful ones, and see how they are structuring deals, because most likely they have a formula, and they have something called a buy box, and so they buy deals that fit within their buy box, right? Fit a
oh, right.
certain
Yeah.
criteria. And so they most likely have a formula for how they fund these deals, how they structure the contracts. And you can see all that stuff being their
Yeah.
bookkeeper, right? So you can
Yeah.
steal that stuff. So yeah, it's very eye-opening,
Yeah.
very
Yeah.
eye-opening.
Yeah.
Number three, see how others are building wealth in general, right? So real estate investors, there's a video in one of the courses kind of going through like who are real estate investors and what do they care about. I think it's
Mhm.
the multi six figure course, but they are a group of people who, they are real estate investors, but they also build wealth in a lot of other ways too. And just
Mhm.
having casual conversations with them, they'll talk to you about that stuff, and
Yeah.
you'll actually learn a lot from them about how you can improve your family's
Yeah.
long-term wealth building strategy. So
Yeah.
go ahead.
I just want to interrupt for a second and say that so many of us grew up, and maybe a lot of listeners are still in this world where it's taboo to talk about money.
Mm,
And so, like, as a bookkeeper, I think some people who are just starting out on their journey are like, they're afraid. They're afraid to talk about, the fact that they're a bookkeeper. They're afraid to like talk to business owners about money. And there's like this huge kind of baggage that comes with people. But what I've noticed about real estate investors is they love talking about money, right? So
mhm. Oh yeah.
so it's like it's an easier conversation than maybe having a conversation with a hairdresser about her books. So
Yeah, yeah. I haven't had any conversations with the hairdressers about their, as a prospect, but
all right.
yeah, not all, but there's always exceptions. But
Yeah.
I will say most real estate investors, they view any money that's going out of their business as an investment, right? And
Mm-hmm.
so if they're going to invest in you, invest in your services,
Yeah.
they want you to be able to quantify their return on investment,
Yep.
right? And so
Yep.
this is getting into stuff we're not really hitting on today, right? But
Yeah.
just tracking things within your own business,
Yeah.
that you can then go, market to your niche. So
Yeah.
but yeah, just every different way to build wealth, like they're super into that, not just real
Yep.
estate. So that's another
Yeah.
benefit. These last two are big ones for me as far as choosing this niche, other than having a competitive advantage being an operator in the
Mm-hmm.
niche prior. But no shortage of prospects slash clients. And they're also very easy to find. So
Yeah.
I already mentioned there's a huge, there's a huge gap. And so
Mm-hmm.
that's what I noticed when I would just talk to real estate investors, like back in 2020-ish. Go to conferences, go to local meetups. That's a huge thing with real estate investors, local meetups
Yes.
all over the country, in-person meetups and virtual. And so they will express to you that their pain point, one of their main pain points is bookkeeping, right?
Mm-hmm.
Because it translates to not knowing their numbers to be able to
Yep.
make data driven decisions
Oh,
for that
that's
next deal.
yeah. Oh, that's
Yeah.
an actually that's another really great point. Is that one of the things that we talk about a lot is the fact that a lot of business owners are scared of their numbers. They don't want to look at their numbers. If they're a plumber, they just want to focus on plumbing. If they're, like a hairdresser, they just want to focus on being a hairdresser, right? And yet with real estate investors, the numbers are like what drive everything. So they're going to be super, super interested in learning more and knowing everything about it.
Yep. And if you present them financials and they can't figure them out, they're going to immediately let you know because they need them to make decisions.
Yeah,
So
yeah,
it's
yeah.
it can be intimidating in the beginning.
Uh-huh.
But there's huge opportunity there though once you figure out what they like and once you figure out how to do things correctly.
Yeah.
You can provide more value to them, I would argue, than a lot of other niches.
Mm.
So, so yeah, they're everywhere. A new real estate investor pops up every single day. You can just
Yeah.
go on Bigger Pockets, like I mentioned before,
Yeah.
biggerpockets.com, and you can just see how much they've exploded over the last few years.
Yeah.
Like so many people are interested in this. So,
Yeah.
um, mention the meetups, super easy to find. One of my go-tos is going to Facebook groups. You can literally just, you can Google, you can Facebook it, whatever you want to do. Real estate investing group, and
Mm-hmm.
meetups are going to pop up, virtual stuff's going to pop up.
Yep.
Your local area probably has some sort of Facebook group tied to it. So like
Mm-hmm.
type in REI, type in real estate investors, just type in all the keywords and you'll be able to find it pretty easily. But yeah, easy to get around these people and interact with them is really what I'm getting at.
Yeah.
Last one, and I've hit on this multiple times, but there are very, very few bookkeepers and bookkeeping firms that truly know real estate investing and do the bookkeeping, do the accounting really well. It's very, very, very few out there. So if you can be one of those ones that's kind of like a top dog within the industry,
Yeah.
you have a massive competitive advantage because people are going to leave those companies just because they're not getting the level of service that they signed up for, and eventually they're going to find out about you and they're going to come to your bookkeeping practice.
Yeah.
So
Yeah.
yeah,
Awesome. And
yeah.
and you're going to know exactly what to do and how to handle things if you take Max's course. So, speaking about the course, some questions that have come up in the chat. First of all, the Facebook group. Joel, do you have the Facebook group? The Facebook group didn't pop up on my list of things here. Well, you can't see my screen anymore. It didn't. The link that I had doesn't. So I think, Joel, I gave the Facebook group. No, he doesn't. Do you have the Facebook group link
Sure,
that you can
absolutely.
pop in the chat?
Yeah, here it is
Because
right
that's where
here.
you're going to do your presentation this afternoon, right?
Yes, it is. Yep.
Lisa's asking how to join the presentation this afternoon.
Yes,
So,
and yeah, let me I can snag that
she
information for
says,
you guys too.
okay, great.
Yeah, let's see here. Okay. Yeah, I'll snag it from our group.
And then Suraj is saying that the six-figure course is closed for enrollment. Is what it's saying.
Okay, let me hop into Teachable and I'll investigate that
Okay.
because it shouldn't be. I may just have to unpublish it and republish it. So I'll get that for you guys.
Okay. And then Linda says, how experienced in bookkeeping should you be before taking the course? Can you be a beginning bookkeeper? I feel like we've covered that already. Is that he does expect you to have a baseline level of knowledge of bookkeeping. So a good progression for you would be to take our Acadian fast track so that you have lay the foundation of understanding the entities and chart of accounts and how to do all of that and all of those foundational principles. And then once you have that under your belt, then you would take Max on top of that. In the same way that you would take the cleanup on top of that. You're not going to start at cleanup. You want to get those foundation stuff. So Uyi has already answered. Okay. Let's see, any other questions that popped up? Nate says, are we exploring a new niche every third week of the month? That is the plan. I don't always, I can't always find somebody. so, so this thing with Max happened kind of like at the last minute because I was like, oh yes, I've been needing somebody for the 16th. So yes, so that is the problem. So yeah, so if you know of anybody else that has a level of expertise like this in a different niche, and has a course, then, because we don't believe in just talking, we believe in doing. So, let me know and we can have them on. I loved this. This was so great having Max on. I would love to do this kind of thing. And he has said that he's willing to come back and do like another thing and we can teach you another nugget at some point.
Definitely.
Siraj is asking, Max, I have some experience with real estate bookkeeping, and if I complete your full course, will you mentor me to get clients? Is that part of any of your
So
courses?
yeah, so the multi six figure like bookkeeper playbook,
Mm-hmm.
massive marketing module, massive sales module in there. So it's what is in that course is more than enough for you to build like a multi six figure, bookkeeping firm. And it's
Mm-hmm.
organized and it's not a massive headache. um, and so yeah, as far as mentorship, so I do provide coaching, but it's kind of a separate thing. Like I don't provide one-on-one coaching to students. And so each student like gets like a complimentary like 30, like we'll hop on a call for 30 minutes, and whatever your biggest constraint in your business like is right now, like let's solve it in the 30 minutes, or
Mm-hmm.
let's come up with some solutions for you to exercise in the call. But yeah, as far as like recurring, when I think of mentorship, I think of like some sort of recurring type of structure. That would
Mm-hmm.
have to be like a paid thing. So I don't quite have capacity for that.
Yeah, yeah.
Yeah.
He's a busy man, guys.
Hey,
Because
we're all busy.
remember, he's a course creator and he is a bookkeeper. Like he owns a firm that does this bookkeeping, and he's a real estate investor himself. And are you a dad? I assume you're a dad.
Yes, I have a 10-month old, and
Oh,
yeah,
see,
yeah, yeah,
busy
very
dad, not just a
yeah.
dad, but a busy dad.
There you go.
Let's see. June is asking about connecting the bank account. Yeah, it looks like that question has been answered. Okay. I think, do we have. Well, I think we've got everything. I think we're about caught up with all of the questions.
Yeah, and the multi-course, it showed up for some of you guys as not was it closed for enrollment? I think I figured that out, so I'm about to fix that right now.
Okay. All right. Awesome. So, just one more thing that I'm going to wrap up with that we always end the calls with, and that is a marketing prompt. So, I'm going to share my screen here. And so, Max has already given you lots of tips on how to connect with the real estate investors and make yourself known and all of that stuff. But one of the things that we always do that you get with the exercise of the week, so this comes as part of the gym. The reason I started doing marketing prompts is that I kept hearing people say, I know I need to post on social media, but I don't know what to say. And I kept thinking, why do you not know what to say? Like, you're learning something new all the time. So as you work through the gym, as you help Craig, your fictitious business owner, work with, tackle all of these different issues that come up, then once you're finished with that, you actually earn marketing prompts. So it then unlocks the marketing prompts and helps you talk about the thing that you just learned. With the exercise of the week, we actually give you one marketing prompt per exercise. So Joel has put it in the chat also, but the today's marketing prompt is Oh, there's two. QBO Quick Tip came in twice. I don't know why. Lindsay, could you make a note to fix that? Um, QBO Quick Tip, real estate investor, your mortgage payment isn't just one expense, it's principal, interest, and escrow. Recording each part correctly not only keeps your reports clean, it also ensures you get the right tax deductions. Want help setting it up the smart way? I'm here for it. Now, we're running late on time today, so I don't want to go into it, but you guys have heard me say that I'm going to stop my screen share here. Okay, you guys have heard me say that that I have lately been using ChatGPT to come up with these marketing prompts. I used to write them all myself, but then one day I thought, I wonder what ChatGPT would do with this. Now this week was interesting. And Joel, if you'll put the link to the ChatGPT conversation, you'll see that when I first plugged in the exercise, I didn't like what it gave me. And so I had to write back and say, be a little, the first one it gave me was too wordy. Like if somebody's glancing through LinkedIn or whatever, it's not going to catch their eye. It was too wordy. And so I had to say, well, that's too wordy. So can you rewrite it and make it more simple? Also, it didn't really call out the benefit to the real estate investor. And so I said, well, wouldn't it be helpful to mention taxes? And so ChatGPT said, why, yes, it would. And so it rewrote it. So the one that you see there, the one that we have given you today, is actually the third version after I had that little conversation with ChatGPT. So Joel, if you will put that in the chat, or Lindsay, I don't know, whoever's, Joel already did it. So that you can click the link and you can actually see my conversation with ChatGPT, and then you can understand kind of like how to do that. Okay. All right. And let's see what other announcements really quick. I'm surprised that the chat hasn't blown up with recertification questions. So those of you who are recertifying your QuickBooks Online Pro Advisor, our course materials dropped last night. So if you have already purchased those, then you can get them. They're already in your account. If you would like to purchase them, then the link, I don't think I gave it to you, Joel. It's just www.acadian.com/recertify. So you can get our materials if you want. You have until June 30th to recertify. If you don't know, if you have to recertify or what the whole recertification stuff is, we have a blog post that goes into all sorts of details. I don't know if Joel or Lindsay, if you have that blog post where you can put in and you learn understanding the cycle. And then actually it came out in the newsletter this morning too, also was my video where, thank you, Lindsay. My video where I went into all the nitty-gritty details about recertification that's on the YouTube channel, that went out in the newsletter this morning. So again, if you didn't get the newsletter, spam, promotions, junk, make sure you've got it, reply to it, put us in your contacts, and tell your provider that we're not spam and that you actually love us. And anyway, all right. So with that, guys, any other questions for Max or me or anything?
This has been a lot of fun.
He says what's that, Max?
I said this has been a lot of fun. Thank you for this.
Oh yeah, it has been great. I love this. Like I said, this is the first time we've ever had a guest like this. Usually it's just me blabbing on. So this has been really fun. I want to do this more for sure.
Definitely.
And so it's been great having you. I'm so glad that you are a resource for our people. And he says my head's not wrapped around escrow being an asset.
Yeah.
Uh,
Yeah. So Heath, it is or, if you even have a mortgage on your house and, you pay the mortgage, it's most likely has principal interest in escrow. So if you've never looked at a mortgage statement on your house, or even somebody else's house, it's going to be broken down into three different parts, which Margie went through in the exercise. So the escrow is basically money that you are giving to the lender, and the lender is holding your money. So like that's why it's an asset to you, or that's why it's an asset to the investor, whatever it is. And so they're going to use your money that they're holding for you in that asset escrow account to pay taxes, pay insurance, and then usually on an annual basis there will be some sort of like escrow adjustment. So if you've ever seen anything like that, but yeah, does that make it a little clearer?
yeah, if you don't understand other current assets, just another plug for Fast Track because that's when we go over and we talk about other current assets. We talk about the balance sheet, how it's organized by how quickly things turn into cash, and the liabilities are organized by how quickly you have to pay them back. So anyway, all of that is in Fast Track. All right, excellent. Yes, Anna Marie, thank you. Yes.
Oh,
All
Margie,
right, you guys have all got it.
one
What's that?
one more item for you, Margie. So
Yeah.
Anna Marie in the chat is actually the person who connected us.
Oh, is she?
Yeah,
Oh,
yeah,
yay.
yeah, yeah. Anna Marie's awesome. She's done subcontracting work for Time Capital Bookkeeping, so our bookkeeping
Uh-huh.
firm, for a while, a couple of years or something like that. And yeah, she's been in our community for a long time. So yeah, we
Oh, wow.
know each
Oh,
other. Yeah.
fantastic.
Mm.
So, and I think that they met our team at the BDO Alliance conference. Is that right?
I don't know that, but
Okay,
that
maybe
sounds
Anna Marie
cool.
can tell us.
Yeah.
What's that?
I said I don't know that fact, but that sounds
Oh,
really
okay.
cool. Yeah.
Anyway, I don't know how they met. She met our team somehow and connected us. So
Mm.
anyway, so wonderful. I'm so glad. All right, guys, that's it for us. I think we're gonna call it a day. Oh, Anna Marie says I just watched some of your webinars and heard you wanted to do niches. All right, excellent.
Here we
Well,
are.
here we go. And look what happens. All right, yes, construction. Yes, I'm aware of Penny Lane. I don't know that yeah, I'll have to reach out to her. She and I had dinner last year. I don't know if she remembers me, but yeah, we can reach out to Penny Lane for construction and yeah, all sorts of things. You guys all know we have a restaurant deal cooking. And anyway, all right. I'm Margie. Yes, of course I am. Alrighty, guys, it's been wonderful. You have a fantastic weekend, and I can't wait to hear your success story. Bye bye, everybody.
Thank you guys again. Have a good weekend.